Well, I think the political response given by Europe to the financial crisis was not so bad after all. I remember a headline in the International Herald Tribune that said, suddenly Europe looks pretty smart. And I think it's true for several reasons. The first one is that the financial crisis was seen as a failure of the US-style free market economy, whereas the European Union is standing for more state involvement, more protection to the people, for another kind of the so-called social market economy. So it was like if we suddenly were right. The second point is that Europe, in a way, set an example for the United States, which is unusual. Usually it goes the other way around. And the third point, maybe most important, is that Europe got together, offered a united and swift and massive answer to the crisis under the leadership of Nicolas Sarkozy, but under proposal by Gordon Brown, so everybody could be happy. There was a short period of dithering, of hesitation, of division, but then after a few meetings, the 27 states got together, and I think that the negative sides of Sarkozy behavior became positive. I remember a German diplomat who said that in a time of crisis, hyperactive becomes energetic, unpredictable becomes pragmatic, and overbearing becomes dogged. So it's true that we did not, of course, I'm not speaking out of patriotism, but Sarkozy did well. It doesn't happen so frequently, so I must say that. And I think also that the different European institutions played their part in a good way. Of course, I don't know what will happen now. I'm talking about political response, and I'm not able to make judgments on the economical measure. We'll see. But I think all the institutions worked well. The Commission, maybe a little late, made proposals for an emergency plan and then for midterm measures. The European Central Bank, which was for the first time played a role as a kind of manager of the crisis. Usually its role is to keep the inflation down, and now in this crisis, by injecting liquidity, by acting as it did, by cutting interest rates with other banks, which was really something bold. For the first time, the president of the central bank, Jean-Claude Trichet, said that inflation was not the priority. The fight against inflation was not the priority, but the fight against the credit crunch. So we discovered a new ECB, and then the member states, after a few meetings, got together and gave an answer. With few, well, of course, it was not a common answer. It was also only an agreement on common principle. As Barroso said, the European Union is not a single state; it is a union of states. So each state will do what he wants, but on the basis of common principles, which are helping, avoiding banks to go bankrupt, guaranteeing the savings of the people, and taking control of the banks for the time they will need it. So on the whole, I think it was not so bad. Now let's see what will happen. Maybe after the Georgian crisis, where the Union played an important role, this financial crisis offered another opportunity for EU to be an actor, maybe because of the American election that made the United States outside again. but at least it was encouraging. Usually we are rather critical of the union. I think this time it was good.
Great.